Well, we at ET now spoke to Sunil Singhania of Abakkus Asset Manager, where he mentioned and spoke about the entire financial sector. He believed that there's some street concerns over the moratorium and its consequential impact on the NBFC sector, but he believes that the pressure and the concerns are pretty much on the liability or the funding side. The asset side is particularly well maintained, but when it comes to the funding scenario, that's a slight bit of a concern for the sector. In fact, he added that there have been troubles in the mutual fund sector, which primarily is a good source of funding for the entire NBFC sector. So the problems and the concerns in the mutual fund sector have been a little bit of concerns that's dripping down to the NBFC sector as well. In fact, he added that the quality NBFCs are looking good for the longer term perspective as of now, given most of the companies have raised capitals in the near future. In fact, in the past few days and months, we did see that the companies have been buffering some amount of liquidity and additional capital on their books. Secondly, he also added that the cost of liability has reduced significantly, even though there have been little uncertainty as far as lending of the banking sector to the NBFCs are concerned. But nevertheless, going forward, he sees that this would also stabilize and the cost for funding for the NBFC sector would go down. From among this space, he added that CV financiers have been ignored, given the fact that the companies on the CV front have doubled in terms of pricing, given the fact that people are a lot more optimistic when it comes to the entire transportation and logistics sector. We've seen this segment picking up, and also the CV sales are expected to do well. So this is one segment that has been ignored, and he believes that this is one space that we need to look out. They've been ignored for now, so definitely from a longer term perspective, he sees a lot of value when it comes to the entire diversified financial space. He also adds that provisioning have been adequate when it comes to the entire sector. And if I look at the pre-provisioning or operating profits, these companies are trading at almost 3 to 4 times. So they have adequately provided in the March and the June quarter, but going forward also he believes that the provisioning would be on the higher trajectory, which somewhere indicates that the companies are well prepared for the going forward, given the kind of challenges that they may see. However, there are some amount of concerns for the street over the post-moratorium phase, given that the moratorium ended in August and it specifically was higher for the entire NBFC sector. He believes that this space particularly might be a bit of a concern, but once clarity comes in and once clarity kicks in, he believes that we can see some amount of positive surprise and an upside to these companies, the quality ones. And in fact, lastly, he also added the entire NBFC sector is a good buy, and they are preferring the sector for the next 1 to 2 years perspective. So definitely there are some amount of concerns, but the companies are the quality companies are well prepared, well liquidated, and even in terms of capital front, they are doing well. So going forward, he sees that there is an opportunity in this sector for the next 1 to 2 years.